Hey everybody, Boris, Forex. Welcome to the weekly technicals for the crosses for April 30th, May 4th, 2018. And the week for the crosses is actually extraordinarily interesting. We've had lots of moves in the majors, but there's been a tremendous amount of sub-stories that are, I think, going to really fully develop as this next week takes hold. My favorite ideas for the crosses so far have been the Aussie Kiwi, which I think is topping out at this point. Now, there's always, of course, a danger that we could have negative Kiwi data, that we could have a pop. But right now, the 106, 108 seems to be the resistance corridor, and I really kind of like the fact that data has the price action kind of stalled around above the 106 level for a move back down towards the 106s as we get a rebalancing towards the Kiwi going forward. The breakout trade this week was the euro pound, which really has flipped around now essentially on pound weakness, because pound has essentially been a one-way trade to the upside, has really challenged the lows in the euro pound around 86, and now seems to be very much a one-way move back up towards 89. The breakout move that we saw on Friday is going to be, I think, very significant as a move forward, especially if we get continuously drab and dreary data out of UK and the market decides to really sell the cable hard. And then the last trade is sort of interesting is the Kiwi Swiss. This again, a trade effectively on Kiwi and Kiwi strength and Kiwi recovery. This is a carry trade that got very badly hurt that could have a chance to come back. It's a sort of a more slow, but I think and certainly more favorably payable way of trading Kiwi to the upside. Let's take a look at the charts and see how they all set up. So let's go first to our crosses. And we can start actually with the euro pound, because I think euro pound was just so powerful as a move this week. Look at this incredible move. This move on Friday took out 1, 2, 3, 4, really 5 days worth of price action and closed above that. It's a major breakout candle. It's really just screaming forward momentum, and it's frankly a bet on cable weakness as much as anything else. Now, as I said, this data this week is really skewed towards UK with PMI manufacturing and services and all of the other data sets. And unless the data is just extraordinarily, surprisingly strong, the potential here for us to move towards the 88.50 level is quite strong. There is really no, I mean, we are hitting near-term resistance here, right? Which we sort of really rose through in one fell swoop. But whenever we have these type of very strong breakout moves, they don't tend to be a one-day affair. They at very minimum tend to be a 2 or 3 day affair. And the amplitude of these candles you can see here is nowhere as strong as the amplitude of this one. Now, we've had, of course, certainly potential failures here. This was a big breakout with a failure that didn't quite end at the lows, and then actually provided further continuation longer. So you could have a near-term failure here if the UK data surprises somehow to the upside. But generally, given the fact that we've had forward indications that UK data is really not that strong, it's quite likely that we're going to have more continuity, and the trade here towards 88.50 is quite doable as the week goes by. So the other trade that I want to show you is, let's see, Aussie. That trade, you can see, is really stalling out at in front of the 107 level. What's the 10 high here? Is 107.28. We have basically had 3 days, haven't been able to make fresh highs in 3 days. And it looks to be like this 107, 108 is a pretty serious resistance. Can we come back and trade down to 106? Certainly possible. We've had a very strong move to the downside, big recovery here after a big strong move, but it's stalling out just at exactly the points of resistance. Could this go up to 107.50? Certainly, but I think all the way up to 108 is a reasonable place to put your stop on the assumption that we're going to come back and trade down. As I said, we really need to have strong New Zealand data to really reaffirm this could be a turn trade to the downside. If we can get that, that would make it much easier on this trade. But even without that, I think the relative strength of the Aussie has kind of come to a screeching halt here. And unless we get some uber bearish news out of New Zealand or surprisingly hawkish RBA, which is very much the last thing I expect, this thing trades back down towards the 106 sooner rather than later. And then last but not least, taking a look at the Kiwi Swiss here, we see that it really found nice support here, 69.50, bounced back up towards the 70, and certainly has a chance here for us to trade towards the 70.50. Overall, Kiwi Swiss still remains in an uptrend. It's a very, very strong carry trade. Interest, I think, of any major simply because the Swissy is so negative. And it's a trade basically both on the fact that dollar strength continues and that the Kiwi weakness has kind of reached its near-term end. So potentially here, it's a slow but steady move towards the 70.50 as the week progresses. Those are the most interesting cross ideas I have for you. And amongst those, I think the most powerful case here is going to be for the euro pound on the breakout side, as it took out all these levels and now seems to be the 88.50 level as the week continues. Wish you guys the best of luck, the best of trading. Boris, over now.